crude, a big topic in Washington. President having a cabinet meeting about oil today and also on Capitol Hill. Several meetings. And don't let crude's recent pullback fool you. If you think we're energy hogs in this country, just look at the Middle East. Some of the numbers there are amazing. And it might be what keeps oil prices high. Joining us with a new look at the story, Jeff Rubin, chief economist at CIBC World Markets. Jeff, it's an amazing point a lot of people don't realize. Per capita energy consumption, the highest in the world, is in the United Arab Emirates.
Well, right in the Middle East, and last year, Middle East exports fell 700,000 barrels. Middle East's own consumption went up 300,000 barrels a day. That's as much as China, with only 1/4 of the population, and that's exactly what we expect to see in the future. I think over the next 3 to 4 years, we're going to see exports from the Middle East fall by about 1 million barrels a day.
Because they drive with the windows down, the air conditioner on, and things like that?
I'm sure you're right, Jeff, on that score, but I just want to say we are going to get a drilling vote in the Senate. Harry Reid has opened the door. Nancy Pelosi not yet in the House, but I think she's going to be forced to. It's the biggest election. So here's my question. What about drilling in the United States? We're the only one of these countries that is not using their natural resources properly or efficiently or even at all. Could that change the story?
The only place that we've seen production growth in the U.S. is out of the Gulf of Mexico, to this point at least. We'll see if that changes. All I'm saying is that right now the Middle East is exporting as much oil as they're ever going to export. We got to realize that all the power in the Middle East comes from burning natural gas, comes from burning oil. One day at Ski Dubai, their indoor ski hill, consumes as much oil as an average American would drive for a whole month.
Well, they are making some efforts, Jeff, to go green. I mean, they do get the joke, I mean, about having an indoor ski resort.
I know,
calling it green. I mean, there is an irony there, but they are making efforts. We got some of the first purely carbon neutral cities in the world being built there.
I think the real issue there is desalination, that we're going to see about an 80% increase in water desalination plants, and that has huge fuel requirements just to replace the loss of water depletion, which is much more acute than oil depletion. Yeah. Saudi's going to be burning an extra 300,000 barrels a day.
You know, Jeff, I want to turn this thing around, because if these countries in the Mideast are industrializing, they're moving towards free market capitalism, I think of them as sort of miniaturized China or India or whatever. There's nothing wrong with that. I mean, I think the hook here is we're not going to get their oil, so that gives us even more reason to move on the outer continental shelf and shale and other domestic production. I had Larry Nichols, the head of Devon Energy, on Cullen Company last night. He's going great guns in Fort Worth, Dallas, for heaven's sakes. It's the biggest natural gas find. In other words, the responsibility is on us, right? Those guys are trying to grow their economies. That's good. We are responsible.
Absolutely.
Right?
That's absolutely true. The only thing I'll say is it's not exactly free markets when you're burning oil at less than $3 a barrel or 25 cents a gallon, as Saudi utilities are. But the question ultimately is, it's their oil and their natural gas, and they can do whatever they want with it. We should recognize, however, that we can't rely on these places for future supply.